to start with my first slide, which carries my introduction. So I think I don't have to introduce myself. The important part about my PowerPoint is, the disaster management DRR issue is about law and economics. But the interesting thing is that we've been for years, first we talked about philanthropy, that should be there, then we talked about equity, and then we talked about the structures and the law. We now need to go further, and this conference is giving us a chance to talk about something that is embedded within the law itself, and law need to be growing and getting hold of those concerns which are preventing to some extent the expansion of law. And so I have a few slides which I want to put before all of you, and we'll start the discussion with that. Now I come to the first slide, which is titled as Economic Activity and Deaths by Disaster. Now we've been talking about risk. Risk identification is the centerpiece of Sendai, but we've been focusing on geographical risk and social risk. We have not gone beyond that. And what are the economic risks? COVID has put it inside out, that we can't go on forever without talking about finance. And why? Because now I'll put the data why we cannot do without talking about finance, either in law or in institutional structures. To start with, a very, very naive slide, which is the beginner slide, is you see the iniquitous deaths and damages that occur out of disaster. The highest income group in the world, 9.3%, has around 100,000, 124,000 deaths. And then you go to the lowest income group, which has how much? 627,000 deaths. And everything is in the middle. So now you see the disparity which is embedded here. And how can we have law that is the same for all of them? We need to look into law a little more deeply with a visionary focus on those who suffer the most but squeeze the least out of nature. Next slide. It's the second slide. I'm talking about the relationship between production, spending, and incomes in an economy that we talk about resilient economy. Now we use this word resilience in a number of ways. In fact, I looked into the Disaster Management Act of South Asian countries and 2 countries in Southeast Asia. And I found that the word resilience is not even mentioned in the Disaster Management Act. Definition is a far cry. So we have been given the freedom of design the meaning of resilience the way it suits us. But by and large, we know that there are 2 things which matter when we talk about resilience in disaster law. One is, you look at the top, which is the production unit, the factories, industries, firms, and down below is a household. And they are also the structures of, where acts of public administration. We design the whole system of administration and governance around these 2 features. So financing also has to be around these 2 features. Now look at on the right side, it's my right side. So which is that the household needs net savings, it has to have net taxes, and household needs certain goods which are to be imported. But on the other hand, the middle part is the institution, the banks, governance, and how we have a relationship outside our country. The whole thing is about the political features, the institutional features, the Samaritan diplomacy that has to go on for getting the best for our households within the country, so that the households become resilient to handle a disaster. But then when we go further, what takes care of the production units? The investments which are coming from households, the government expenditure which is coming from the way government functions and manages itself in the national and the international arena, manages the taxes, designs taxes, and also payments and goods and services. And the third is export expenditure, which is also more or less government delivered, but of course, about more than 80% is in the hand of private entrepreneurs. So that is also to be managed largely in a democratic country by the government itself because of the constitutional requirements. Now, when we look at the red lines and the blue arrows, there is something that balances the two, which is the consumption of domestically produced goods and services. That largely designs the kind of behavior that the government is likely to have, which I will explain in more detailed manner in the next slide. So these factors are the fundamental factors that provide us a rationale on why we need funding, why we need to finance disaster management or disaster risk reduction, more appropriately, disaster risk financing. Next slide is now we are coming to some thinking ideas. There have been lots of ideas which have been coming since the talk on disaster risk financing took place in the global world. There are lots of studies. Some studies have been saying that the disaster really pushes you into poverty, extreme deprivation, and you cannot come out of it. Certain classes will never be able to come out of it. But there are some very positive studies also. And when initially I always discarded these studies because I thought they were very capitalistic oriented and they are not really thinking about the poor classes. When I looked into it and I related it to some of the countries in the South Asian region that have actually risen to a more resilient society, a more resilient economy, is because of certain disasters that keep pricking them all the time, and they are able to generate wealth out of disasters. Now, this is, I really like Alabala Burton's study, 1993, then he did in 1996, and then 2006. This, the study says that the positive impact of reconstruction expenditure that happens immediately after disaster, there is a spring of activities, there's immediately everyone has that criteria, the national spirit, the philanthropic spirit that we have to work together, hand holding, all the negativity is gone and everyone gets into the reconstruction activity. That reconstruction expenditure, it's a phenomenal investment at that moment. And we'll discuss that how nationally and internationally we need to focus on the reconstruction expenditure. The study argues that the multiplier effect of capital loss due to disaster event is less than the multiplier impact of new capital which is generated immediately after disaster. And this multiplier, positive multiplier effect that comes into the disaster activity that follow is because the damage, now there's a very interesting thing actually, we can give a thought to it and discuss it further, that the damaged or destroyed capital was already, much gone away. Whatever is damaged in disaster was something to be damaged because it was not very good. So after disaster, they'll build up some new and strong infrastructure. So let the damaged and destroyed capital go away. So this is, one. The other is that because of this, the private autonomous investment comes in. Now, all the owners of capital who were holding the money to the chest in these times really share that money, come forward, and government can definitely inspire them to do that. And the government spending also to some extent increases. If Now, there is this in the Alabala-Burton study, they calculated on using economic indicators that if, say, 200 INR are spent in government spending, G is government spending, during reconstruction period, then all other things remaining the same, the production would increase by 10,000 INR. I'm talking about rupees, but you can convert it into dollars and it would mean the same. If $2,000 are invested during the reconstruction phase, they don't say that it could be at any time. It should be during the reconstruction phase. So see, the galloping effect, 2,000 to 5 is a 5 times increase in development takes place, or strengthening infrastructure takes place. Now, coming to the next slide, this is different for developed and the developing countries. Now, see, when we have to talk about, should we have external borrowings? If we have external borrowings, then we'll have to design the whole infrastructure, financial infrastructure, in a different manner. The consumption is to be looked in from a different angle. And the government spending, again, will have to focus on different areas. But all said and done, as I saw from a comparative case study, ultimately, the external borrowings are indispensable. I would come in the end to finance pooling, but even in pooling, external borrowings are indispensable. A country which is affected by disaster will never be able to develop the revenue that is required after disaster. So, but see, the attack of disaster is different on developed and developing countries. In developed countries, the impact of a disaster is, now look at this very carefully, government consumption and payments increase. They are increasing because government says that, feels that disaster affected people need to get more. If you look at the Katrina, Louisiana state, the government consumption and payment increased phenomenally to Louisiana state, and the bad governance was changed into good governance and good, better infrastructure. Even the migrants who were out on the roadside migrant and food distribution, that became more organized. Second effect is the cash surplus falls. Obviously, if one is a rich country, they have cash surplus, they extract out of the surplus. They are not going for borrowing. And third is the outstanding debt obligation worsen over the period of time. That happened with America. America has not been able to pay debts of China because over the period of time there have been disasters, forest fires, infrastructure losses, lots of problems, environmental problems, and you see that it faces this problem despite being a rich country, despite being cash surplus, despite being technologically, educationally superior with early warning systems functioning. This is the outstanding debt obligation worsening over the period of time. So developed country will also reach the same stage like an underdeveloped or developing country over a period of time, little later, but yes, it will reach that stage. So external borrowings indispensable, the argument goes. Now, developing countries, decreased government consumption and payment. After disaster, government will withdraw the money from the market because government doesn't have the surplus. So it will decrease consumption, payments, pay cuts, salaries cut, all the external benefit that have been coming, the reduce its liability. Increased revenue collection. We face this in India over the last 10 years. We've been seeing that how we have been, how the government has been increasing the revenue collection. And third is adverse balance of payment situation arises. Fortunately, it didn't arise in India because COVID came alongside, and some help came in the fact that we didn't have to pay that amount for buying oil So the savings in the balance of payment was actually the money that we saved from the oils. And of course, the import-oriented policies are also shrunken after the COVID, as a result of which the adverse balance of payment situation does not arise with India, but it is there with a large number of neighborhood countries, with Sri Lanka and one or two other countries in the Pacific region, and of course in the small island states. This is a very, very disaster-prone situation. And now we go to the next slide, where to collect this money from. Disaster risk financing.
Amita, I'm just going to give you a 5-minute time call.
Okay? Oh, 5 minutes?
Yeah.
5? Oh, very generous. Thanks. I'll finish in 5, right? So disaster risk financing, every country has been designing their own systems about how to finance. So in India, the 15th Finance Commission, which came up, and it will be functional till 2026, and it merges its design with the G20 requirement, G20 states requirement, that we must have an internally designed strategy for disaster risk financing. But the whole problem that comes in internal designing, of course, if you have a constitution where there is a clear-cut federal sharing basis, things become simpler. In India, we have a federal sharing basis mentioned in the constitution. We have detailed schedules on what the state, what the center, and what the concurrent list will do. But then the second problem is embedded within the decision making, which is establishment of measurable metrics to finance, which is, I think, a major crisis, because law and finance people don't work together. If the law and finance people work together, it would be easier to set up a measurable metrics to finance. They are all working in silos. As much as I know, my experience goes, that in legal circles, the finance people don't come. In finance circles, they hardly call somebody from law. So they are all designing their own strategy, as a result of which the scalable social production or sustainable social production required for sustainable development goals is not reaching very well. So household, business, agriculture, they all need different kinds of insurance policies, protection policies. This need to be worked out, and measurable metrics need to be separately prepared for the insurance policies targeting households, businesses, and agriculture production. Next slide. And risk pooling is something that I really like in disaster financing, in which, because we know that nobody is rich enough in the world today, because everyone is facing catastrophic situations. COVID has made everyone poorer, more driven by the requirements of the suffering majority, and disasters are eating out on the land, on the forest, and lots of other assets that had come naturally to the country. Risk pooling actually spreads out the risk to many stakeholders. And in disaster risk, there's a transfer mechanism. World Bank has a very good disaster risk pooling effect, but it doesn't talk about the equity principle very well. So that principle needs to come here. Second is insurance company risk pooling, which is the most effective one right now. If the countries really, the governments really make an effort of bringing the insurance companies functioning within their region, then this factor can work out. To start with, it could work out from state to state. In America, this has already started in some states which are more disaster affected, but it needs to come up in a more stronger manner. And the third is, which is very relevant to us, a form of a regional microcredit, which is still to come in disaster financing. That regional microcredit, come to the next slide, last slide, which is the risk pooling. Why I'm linking risk with microcredit, because there are people sitting over a hazard. they know that this would convert into a disaster anytime. They are at the coastal area, they are on the hills, near the volcanoes, near the forests, which are always prone to fires. Microcredit means that that kind of a microcredit system at the grassroots level could be built up to build the sensitivity towards their hazard, and they don't want to leave their homes because they still want their homes despite the hazard. So the microcredit would make them responsible, bring some money forward, which would be immediately available to these people whenever they are affected by disaster. But in a regional manner, this disaster risk pooling becomes quite difficult. We want to share the risk with Bangladesh, with Thailand, the BIMSTEC countries. We want to share it further with Philippines, with Malaysia, but none of us would do that. Why? Because there is politics in between, one country's relationship with the other country. We are not coming together in hand-holding manner. For example, in BIMSTEC, disaster management was embedded that we would have joint exercises on disaster risk reduction. In 7 years, in fact, since it came up, only one exercise has been held in 2017 in India, which also never mentioned the details of the kind of exercise which is required in a climate changing world of today. So financing risk is far-fetched. You know, none of these regional organizations are talking about it. It was mentioned in a minimal extent in SARAN 2011 SARC agreement on rapid risk natural disasters, you know, SARAN agreement. And it never picked up from the ground. Nobody looked at it. So even there, we have nothing, but this is the only future that we have, and we can have it with good Samaritan diplomacy, trust, build faith, ultimately traditional legal principles of equity, trust, and faith come up to save disaster financing. Thank you very much.
Thank you, Professor Amita. I thought I was being really clever by coming and standing up here until I realized you can't actually see me, but you can now. So thank you so much. I realized that it was condensing quite a lot into this time slot. So thank you for your thoughts and your reflections. And we're going to, please stand by. We're going to hold off questions until after all of our speakers have had their turn. And so please stand by for any questions, but thank you so much for that.
Thank you. Thank you.
I'm going to hand over now to Raymond, who will be talking to us about anticipatory action. Raymond is the IFRC regional coordinator for anticipatory action. He's based with me in Bangkok. And he is also the Anticipatory Action Technical Working Group co-chair with one of the UN agencies, and he'll talk to us a little bit about that. Over to you, Raymond.
Good. Yeah, thanks so much. I'm Raymond. Yeah, thanks for the introduction. So I'll just give you a brief introduction on anticipatory action, at least from the humanitarian system, how we normally define it, and then a few slides on financing. So normally we would need a forecast that tells us when and where something is going to happen. In this example, it's a flood peak. That's our hazard event. And within that very short time frame. So that is, for floods, it's 5 to 10 days. For cyclones, it's a day or 30 hours. So it's very, very short, right? But we need that kind of forecast, right? It's not a sub-seasonal forecast that's like, oh, it's going to rain a bit more in all of Southeast Asia in the next 3 months. That's not something that a humanitarian organization could take an action and allocate funding. I think that's also the point, right? If it's longer term, so there's the DRR preparedness spectrum, or then anything that's after the event is the traditional response. So we're in a very well-defined area. But in order to be able to do something, we need an anticipatory action protocol that tells us when and where. what actions and with what funding. So where does the money come from? How is it going to be allocated? But in order to be able to have that protocol, I borrowed the phrase, we have to do a lot of slow thinking. So to develop a protocol, it can take up to a year because it is quite extensive. We need to understand the forecast and the trigger. So all of that needs to come into, I guess, the thinking, including the financing. Where's the money allocated from and to, and is it at the right level? Is it at the local level? It's probably not. But when we talk about anticipatory action, we look at all the three elements that I actually mentioned before. So the early warning or the forecasts, the actions to protect lives and livelihoods, and then the prearranged financing. And all of that needs to be implemented before the hazard, as I said, right? And we put all of that into a protocol. It's normally an anticipatory action protocol. Yeah, it's a lot because we need to identify the right action. So it could be cash, it can be evacuations, it could be pre-harvesting, but then also the funding, right, comes into that as well. Is it for all hazards? It is for the traditional hazards, all the social, all the hydromet hazards, yes, but also health and socioeconomics. It's difficult for others, tsunamis, flash floods, conflicts, and it's difficult because the forecast is either unreliable, is not there, or it's just too short term. I mean, earthquakes, no, we have probably a minute or so to do something. That is not AA, as we would call it. Why do we do it? It does make a difference. We have done evaluations. So there is statistical evidence that, yes, it makes sense in terms of return on investment, but also in reducing the impact. But I think the most, I don't know, the best argument, it's a more dignified approach to helping our communities, because we know something is coming and then we don't do something. And then later we come and say, okay, here you have a bit of cash or something. That is not the way to do it, right? From a humanitarian perspective, yes, we should really help communities to take action. Yeah, so I just want to give you a bit a flavor or maybe an understanding of anticipatory action in Asia Pacific. How many protocols from NGOs, but also governments, if there is a guess. And here you actually have a map. So it's quite a lot going on. We have actually 101 anticipatory action protocols. We also, we didn't even know that we had that many. This is based, it's our Asia Pacific Technical Working Group. We did the mapping and we actually haven't captured all. So there must be more protocols. You also see it's a lot for floods. So that's dark blue, also for cyclones. Some of them are also concentrated around Bangladesh, Nepal, and the Philippines, just to let you know. But yeah, that's why I'm here, right? The prearranged financing for anticipatory action. We also did a mapping to see a bit, well, where does the money come from for anticipatory action? This is by hazard, but you see the colors, right? It's our own emergency funds. So for example, from the IFRC, we have the Disaster Response Emergency Fund. The UN has the SURF, their START fund from the NGO. So there are different emergency funds. It can also be own agency funds that are not in a fund or in a pool fund. It can be direct donor funds or other funding, just to give you a bit of an overview there. But there are also different types of funds, right? The whole build money, we need, as I said, we need to build the protocol. It can take a long time. We need money for that, but then we also need fuel money. We need money to then actually do something when the trigger hits. So that's the activation. We need to provide goods. We need to pay our volunteers. It's all that comes in there. And normally that will be the trigger, right? When the trigger head, when we know, yes, the flood's coming, the hazard or the cyclone, before and after. That's a bit the different types that go into that. According to the World Bank, I found this slide, which I think is interesting on the one hand, because the early action finance, there, the blue one, it is the smallest one, which is true. You can only do so much in let's say 3 days. You can throw $1 billion at something. The absorption capacity is very limited in that time frame compared to what then comes after. But what is missing here is, on the one hand, that kind of build money, right? That I said we need that money, and that's actually still quite a bit there. But then also the reduction of the impact that you achieve with the early action or anticipatory action intervention, which is quite significant, and which should also be somehow accounted for in that slide then. Now I wanted to show you a practical example from Bangladesh. The UN has the Central Emergency Response Fund. It's the SURF. They set aside 5 million. That's, for us, it's quite a lot. 5 million, one country. It's together with WFP, BDRCS, FAO, so with different organizations from the UN. 3 minutes, okay. And they actually activated. They reached 200,000 households jointly. And here I show you a bit a overview. So the red one, the red line is the trigger level, right? You see it almost hit that trigger level. But as the flood waters were going down, the readiness trigger, so it's a two-stage trigger. On the one hand, we know, yes, the readiness, it's something is coming. And that trigger was reached because it already saw, okay, a second flood peak is actually coming. And then once that was clear, the activation trigger was reached. And then the different agencies implemented the action. So it's menstrual health and dignity kits, it's cash, it's feeds and silos. And it's all being done basically almost ahead, or basically during the flood peak, but it's still quite good for us. So just to give you a bit an overview. The other thing I wanted to talk about is insurance. So from IFRC, we have the Disaster Response Emergency Fund, which is very similar actually to the DREF. That's just a bit of background. Yes, it's established 1979. It's used for our response operations. That's when our Red Cross and national societies can access funds from IFRC to help or to respond to a disaster. You see some more information there. The DREF normally provides grants, loans, and also grants for anticipatory action. And that's actually where that whole protocol comes in. You need to have a protocol in place to be able to access funds from the DREF. But what I wanted to show is the DREF insurance, which I think is quite an interesting instrument. It was developed with Aon and the Center for Disaster Protection. It uses commercial markets. It is quite interesting for donors because their contributions can go further. And it doesn't insure a hazard. It insures the DREF's pot of money in case we wouldn't have enough money to respond to a disaster. Here you see that's an example. The funding, for example, we have 65 million in the DREF for our Red Cross and national societies. Out of that, 33 would go to natural hazards. It would work in a way that IFRC, we would buy an insurance for the DREF to make sure in case all of the 33 million was already spent, the insurance would kick in and give us another 15 million to increase our DREF pot. These are just a bit the additional conditions. Yeah, it's an interesting instrument because it is not hazard specific, it is not country specific. It just allows us as a humanitarian organization to be able to respond because there are more disasters every year, because there is a good chance that actually we're going to use a lot of the DREF's money on natural hazards. I know my time is up. How is it financed? That's always the question, right? Who pays the premium? It is our donors. So you see here who has paid for last year. We're also the DREF is also gonna do the same for 2024, 2025. The premium then changes based on the length of the contract. But yeah, just to let you know, if you want to know more, you can actually scan this and then it gets you to the DREF Insurance website. Yeah, I think that was it. Thank you.
Thanks so much, Raymond, for a quick overview on anticipatory action, and then also how disaster response or preparedness is financed through some of our international mechanisms as well. And the reason we want to talk about this is because more and more now, when we are looking at disaster risk management acts or policies within countries or governments, many of them at the moment don't actually have a link to finance. There's no actual disaster management national fund that's been kind of set aside. And now governments are starting to look more and more around how can we do this and how can we access it and how can community groups access these as well. So really interesting, and we have some questions on this later, but I'm going to introduce Exsley Tloiburi, and he is one of the deputy directors with the Pacific Community, or SPC. In another life, he also worked for the Pacific Islands Forum, and these are the big regional intergovernmental organizations in the Pacific, which also include Australia and New Zealand. And they do a lot of work in terms of setting the regional priorities for the Pacific region. And he's also very experienced in terms of climate financing and accessing that and how to ensure that Pacific countries can access that. You also did a stint in Brussels, when I can't exactly remember what this for, but you can come in and introduce that. So I'll hand over to you, Exsley, for your experience at a regional level. Mano.
Thank you very much, Finau, and very good afternoon to all of you. I do recognize the colleague panelists as well. Firstly, before I offer my brief perspective from the Pacific region, since this is the first time for me to make a presentation, allow me to acknowledge the traditional owners and the ancestors of this land, current and present, but also to convey SPC's thank you to the organizers for inviting us to be here, the Institute of Law, Emergencies and Disaster, IFRC, and UNDRR. I don't have a presentation, but I think the good thing with coming last is that the first two presenters have already set the scene. They provided comprehensive context on what disaster risk finance is and what anticipatory action is. For me, I'm just going to zoom straight to the regional level, and particularly in the Pacific, on how these theories work in practice and what we are doing at the regional level. At the moment, as I mentioned earlier, SPC's work covers 27 countries, the 14 Pacific Island countries, or Pacific seats, as others may refer to, a couple of friends and US, New Zealand territories in the Pacific, including Australia, New Zealand, US, UK, France, and others. Those are the members of SPC. So we work with 27 governments across the region. And as I mentioned earlier, the lead technical mandate on disaster risk management falls with the organization that I work with. But previously, I spent 11 years with the Pacific Islands Forum, which is the premium political organization in the region. Specifically on this issue, on anticipatory action and disaster risk financing, it's a new and emerging area in the Pacific compared to how our countries and leaders and ministers acknowledge and recognize climate change and climate finance. And as Finau mentioned, I actually started my career as a regional climate finance advisor for all those Pacific countries before joining SPC since August last year. And at the moment, this is a new area of work in saying that it remains a critical priority for the Pacific Island countries. If I can put that into context, every single year, the average cost of damages from disasters account for about $1 billion per year. A lot of our countries, they are in a constant state of recovery from disasters. What that means is that decades of development gain is often reversed within a couple of hours of disasters that strike Pacific Island countries. And it puts countries and small government administrations in a very, very difficult fiscal space, because they would take a loan to try and recover from a cyclone. In another year, a Category 5 cyclone would strike. We are all aware of some of the recent disasters that have happened in the Pacific. The 2015 TC PAM in Vanuatu caused damages amounting to 64% of Vanuatu's gross development product, GDP. In 2016, TC Winston in Fiji caused damages accounting for 31%, 1/3 of Fiji's GDP. In 2018, TC Gitas in Tonga, 38% of GDP. 2022, the volcano and the tsunami in Tonga caused around 36% of GDP damage to Tonga's economy. And those are some of the key issues that our countries grapple with when it comes to this subject matter. And so it's a priority, but it's an area that is underdeveloped. It's an area that's untapped at the moment, in my view, compared to how our country understands and engages in climate change and climate financing. And I think all of us gathering in this room today, that's our collective challenge. And I made that intervention earlier today, the work that you do in collecting data, in doing risk models, those are very important in informing our region in moving within that direction. And that's something that I would strongly encourage as we move forward. So that's the context of the Pacific Island countries when it comes to this particular subject matter. Our countries and the communities in Pacific Island countries, with the state of vulnerability that they are in, they don't really care where the money comes from. Money is money. And that's a big political issue that's strongly debated, not only at the regional level, but also at the international negotiations on climate change, whether this is a source that comes from DRF or is it a source from climate finance, because the obligations on who pays is not necessarily the same. And that's something that we are grappling with as a region. And as our moderator has mentioned, with that lack of understanding, a lot of our DRM policies within the region does not have that linkage to disaster risk finance, but financing. That's the context. I will now quickly move to our response as a region. So at the policy level, the highest long-term policy that the Pacific has is called the 2050 strategy for our Blue Pacific continent. That was just endorsed last year by our Pacific Island Forum leaders. That's a meeting that's convened every year, bringing together prime ministers and presidents of the Pacific, including the prime ministers of Australia and New Zealand, as well as those other countries that I mentioned. And that is a North Star in our perspective that puts Pacific governments in the driver's seat, and we drive our agenda towards mid-century. And in that, there are 7 key priorities. One of that is on climate change and disaster. And under that, there is specific recognition of the importance of disaster risk financing. And at the moment, as others have already identified, there's a lot of reactionary approach. A lot of focus in the region is exposed after the event happens. That's where you involve a lot of engagements, but there is very little investment in the ex ante, which is prior to the disaster actually happening. And that's where I think there is still opportunity for engagement and raising awareness within the region, so that we could tap more into these areas of work that partners are undertaking in the anticipatory action space. At the ministerial level, we do have risk financing as a standing agenda item for the Forum Economic Ministers meeting. That's the meeting that brings together finance and economy ministers of the Pacific, including Australia and New Zealand, every year. They discuss matters that deals with financing and economies of our region. And there's a standing agenda item on risk finance. There is a DRF regional roadmap that supports the region in terms of how we assist the Pacific Island countries. The translation of that long-term plan up to 2050 is the Framework for Resilient Development in the Pacific, FRDP, that goes up to 2030. aligned with Sendai Framework, Paris Agreement, 2030 Agenda, SDGs, and so forth. And there's a mechanism that supports that to bring everybody to the table, and it's called the Pacific Resilience Partnership, PRP. So a lot of those, that's how I engage directly with IFRC colleagues, with UN agencies, because for our regional organizations, our main clientele group is the government, and that's it. And these are the other mechanisms that ensure we bring others to the table to have discussions on regional priorities. So those are things that we have at the regional level. Right now, a couple of countries are now moving into this space. So they do have climate change or DRR, DRM policies in place. What they don't have is the financing aspect of that. So we have a couple of countries such as Samoa, Tonga, most recently Solomon Islands, Vanuatu, and Kiribati now moving in to develop their national DRF strategies or policies. There are also a couple of countries that are moving forward to develop their AA strategies. Solomon Islands, Fiji, and there's a workshop coming up in Tonga shortly in a couple of weeks' time to help Tonga develop their AA policy. So I think there is work in progress. I will now finish off by what I would perceive as some of the gaps that is out there. One is ensuring that those policy frameworks are informed by credible data and information, and that's where I think the role of researchers and the universities would play a critical role. Secondly, there is also an issue with lack of costing. So a lot of those legislative frameworks and policies and plans are not costed. So it makes it very difficult when those countries and governments engage with partners and they ask how much you actually need. They don't have that amount they don't have that information. And that usually affects how our countries are able to engage internationally and bilaterally with their development partners. The important role of private sector, as the colleague from private sector mentioned today, and civil society organizations is improving, but there is still a long way to go. I think we need to do more at the regional level to bring in those very important stakeholder groups to the table to have meaningful discussions on those areas. So those are some key gaps that I see that is there, and it's limiting our efforts to move in the direction as a region that our leaders would like us to move to. And I would be happy to answer any questions on this issue, but I think it provides you with a context about how these discussions at the international level translates at the regional level and also down to the countries that need this support the most. And these are countries that have been recognized globally as some of the most vulnerable in the world. They are SIDS, they are LDC countries that are in this part of the world. So I'll stop there. Happy to respond to any questions that anyone might have. Thank you.
Thank you so much, Exsley. And we've heard three very dynamic, different presentations. So I think the scope of stakeholders that have been mentioned in the various presentations is extremely vast. And not only that, but we've also heard examples from one of the world's most populous nations to some of the world's least populous nations. And I think it just shows how important this is, but also how far-reaching and impactful climate finance or disaster risk financing is. I'm going to open up now whether there are any questions at the moment for our panelists. So I can see 1, 2, 3. Oh, yes. Let's get ourselves organized. So I'll start with you, Leonard. Yeah.
Thank you for the insightful presentations. Again, coming from a private sector perspective, I hope you could bear with me. We know the many challenges that are currently faced by private sector organizations towards accessing climate funding or risk financing. In your views, what innovative approaches or financial instruments could facilitate quicker access to risk financing for the private sector organizations who operate in these disaster-prone areas of Asia Pacific, for example. And in that context, how can that funding help bring about long-term sustainability for the private sector organizations? The second question is, what regulatory or policy changes that you believe are necessary to encourage greater private sector participation in anticipatory action and disaster risk financing initiatives across the region? And sorry, a last question. Right. How can the PPP, public-private partnership, be structured to effectively distribute the financial risk associated with anticipatory action and disaster risk financing while ensuring sustainability? Thank you.
Thanks. Maybe just keep the mic because I might need you to repeat some of those questions. I just want to check first, Amita, could you hear those questions?
Yeah.
Okay,
Very,
okay, perfect.
I could hear the question, but your voice is very faint, but was that question to me?
It was to all the panelists, so I'll hand over to you first.
All right. The first and the second question that were asked were more or less overlapping. I can only say at this moment that private sector participation is of extreme importance, especially in the risk pooling, because taking up the polluter pay principle, those that have the industrial units or the production units of firms in hazard areas should also have a relationship with the local communities to take the financing aspect a little further. And also the CSR activities are not focusing on disaster risk reduction. I've been looking into about 200, 250 institutions, because I'm staying in a city which is all a privately driven finance city. And not even the basic builders are showing their responsibility towards financing of disaster risk reduction. So private sector need to be, I would say, taken to a little stringent disciplining through law. And the court should take suo motu kind of initiative to take that further. Not even the NGT over here, National Green Tribunal, is taking this forward. But this is an important area, an extremely important area, because a large number of private enterprises make a place very vulnerable to disasters without even having the responsibility of leaving behind some finance for the local people. And about a public-private partnership, definitely the first answer will lead to the second answer, that designing has to be made within the work itself. That I don't know how we need to go forward, but definitely judiciary need to take a very proactive action on that. In my upcoming book, I'm handling this situation with some points for the judiciary. Let's see how it works out to be. Thank you.
Thanks, Amita. Make sure you do share details of your upcoming book with us as well. Over to Raymond.
Yeah, I could probably only talk a bit about the private sector that we use when delivering anticipatory action. So we also work with financial providers who provide mobile money, but then they are faced by the same hazard, right? So if we deliver mobile money to beneficiaries, normally the network is also down, so they need to set up mobile antennas, which also takes time. So I think that is interesting, because we're looking at, on the one hand, at how resilient are these private sector companies or mobile money providers, can they actually do what we need them to do in that very short time frame. Yeah, or the other thing that I was thinking of was, also innovation, right? We also look at any innovative approach for risk understanding, risk mapping. We look at Earth observation. Actually, we have a technical working group on Earth observation working together with NASA and ESA, because they do provide just commercial products that we can get. So it's, yeah, I think that's probably more the area where we would see that collaboration.
I might also offer a couple of responses. One, so I'll start with the question on what can be done better for the private sector to benefit and access some of these resources. One is, I think, what we have and the challenge that private sector face in the region is there's a lot of constraints in regards to the provision of incentives. So governments need to ensure that their legislation and policies allow for incentivizing private sector investments in this area. At the moment, the role of private sector is mostly ad hoc. When there's a disaster, they would be called upon or expected as part of their corporate social responsibility to step up and offer support, but it's mainly ad hoc. And I think having formal arrangements with governments and ministries of finance, for instance, would be a useful step in ensuring that private sector investments in this area of work is incentivized, whether it's tax credits or so forth. Those are important things that government could offer. Also, instruments such as equity and guarantee to ensure that you lower the risk for private sector investment in these areas, things that government could provide support on. And those are key areas to consider. We also have at the regional level the establishment of a regional facility that's called the Pacific Resilience Facility. And the intent is to offer small grants to communities and the private sector prior to events happening. So that's to build resilience before disasters actually occur. And that's a new facility that's out there. And I think that provides a good opportunity for businesses and private sector in the Pacific to engage a bit more actively in that space. In regards to the question on PPP, public-private sector partnerships, I think maybe one potential area that we have an existing regional project over the next 8 years, which is currently being rolled out, is pulling efforts together for pre-positioning of supplies, humanitarian supplies in warehouses in the country, so that when a disaster reaches the impacted communities within the first 24 to 48 hours. And at the moment, most of the Pacific Island countries don't have humanitarian warehouses in their countries. When a disaster strikes, they will be waiting for Australia to dispatch supplies from Brisbane. That's what we have, and that's a situation we have. And we will be waiting for Hercules to bring supplies from New Zealand, from other countries, other developed countries, to Pacific Island countries. And one area we're moving in now is having warehouses in all the Pacific Island countries and working together with the private sector and government and other partners to pre-position supplies that could be quickly mobilized to communities and people that are impacted by this disaster. So I think that could be a potential model, but there may be others that are also out there. And we would be really keen to learn from any experiences in Asia as well.
Thank you for the feedback. I mean, really appreciate it. One of the challenging aspects of the private sector involvement, I mean, they definitely are the first responders, and they work with all the different government ministries, for example, Fiji and the telcos, for example. They are readily out there to send out these early warning messages and so forth. And I recall when Winston happened and when the event in Samoa happened, one of the telco companies immediately chartered a flight to supply, all the provisions of the basic need requirements. You mentioned the word risk mapping. We worked alongside various stakeholders and developed risk mapping, trying to identify where the vulnerables live, how to get access to it in terms of disaster or so forth. The challenge that we faced is the continuity, the sustainability. I can work on it today. Tomorrow, if I move out, who's going to continue the process? The challenge of changes in the government department ministries, a change in the respective stakeholder organizations, people move on, right? Is there something that is maintained to say, look, even if I'm not here, someone to continue. And that's always a drawback. But yes, be rest assured, private sector is always there to work with all different stakeholders. Thank you.
Thank you, Leonard. And just on your point, because in the Pacific, we tend to work based on relationships, right? And when you know someone really well, you can get things done very quickly. But then, as you mentioned, once they move on and move into another role, that everything kind of stops. So we in disaster law, we're big believers in putting things into policy so that it doesn't matter who it is, their job is still to implement this policy which says X, Y, Z. Okay, we had two more hands up from, yep, okay, perfect.
Thank you, Finau. First question is for Amita. If I can go back to your first slide, is the data, is it just specific for India, or is it the global data of that, the percentage of people died per income in disasters? Secondly, remittance, is that included in the revenue that you're talking about previously in the economic revenue in the country? And the third one is, when you talk about increasing revenue in developing countries, that is including taxing people after the event of disaster, where that is going to be, what was the challenge to that, if that measure is being taken? And then I think that's all for Amita. And then I have a question for Raymond and Exsley on the financing. So who is mainly responsible for the disaster financing? That's the first question. And then second one is, I just remember that in the last COP25, I think there was a campaign around the financing disaster together with the climate change. Is that true? What was the update on that? That's all. Thank you.
Yeah.
Perfect. Did you get the questions, Amita?
Right. I could hear your later two questions on remittances and taxing. I couldn't hear your first one, which was something to do with data. Can you repeat that? Your first question, you asked three questions.
Yes, the first question was on the slide that you had on the number of deaths per income, or relevant to the different income brackets. And the question was whether that was specific to India or whether that was a global statistic.
Oh, okay, that was global. That was global. That was received from CRED. So that was global data, and the income levels and the number of death and damages over there. So that was a global data. About the remittances that you mentioned, yes, remittances are very much part of the economic revenue that is reinvested into disaster management. But in the last two instances, that was, one was in 2016, and earlier to that also in 2012 also, twice the governments have refused to take up remittances that could be reinvested into economic recovery by linking it to political connotations. But lately, the government is realizing that that has not been a good move. And internationally also, the government has not been receiving very good feedback on the fact that arrogance of not accepting remittances and not reinvesting into disaster would be of any use. But let's see how this turns out to be, particularly about India. But Bangladesh, Sri Lanka, they've been generously accepting remittances, which is reinvested, and the economic recovery programs are functioning very well because of that. India is a different case. So, and the third one is that taxing, definitely the government is becoming very particular about taxation measures. Since the goods and services taxes have been introduced, there are states which have not been able to pay because of being stricken by serious disasters, and relief is less, and much of the relief that has been given to these states is because of political, having the same party ruling both the states. But it's a different, if it's a different party, then there are different measures which is yet to be looked into with very serious data. We are still working on that because much of the data is not available, and it's a recent phenomena that we've changed how the federal system is working. So this taxation process, by and large, over the period of time in the last 20 years pattern, if we see that taxation has not been increased after disasters. But there are other measures which have taken place in which people are made to pay more. And lately, in the last 10 years, after every disaster, there's a huge public funding which is collected under PM CARES and under certain other PM centralized fund, Prime Minister's fund, which is reinvested into the disaster recovery programs. That's it. I hope that answers your question of what I could really make out, hearing from here.
That was brilliant. Thank you so much, Amita. I'll hand over now to Exsley and Raymond for the second part of your question.
Yeah, I'll respond first to the question on who is responsible for disaster risk finance. And from the perspective of Pacific countries, it's a bit different from the obligations on climate finance, which is the polluter pays principle. And our understanding of DRF is that is mainly related to financing that's mobilized after a disaster, whereas financing that's being perceived as anticipatory action or forecast-based finance, DRR finance, is prior to the event happening. And I think what, as a region, we are trying to work towards now is the framing on how we raise the profile of anticipatory action and that financing that's associated with that to leverage from the climate finance mechanism. So we have the Green Climate Fund, for instance, that could be leveraged to actually help in supporting some of these premiums or so forth that's on offer at the moment. Because affordability is a big issue for small governments in the region. And sometimes there's that experience that they actually subscribe to a particular product and they don't necessarily meet the triggers and so forth. And that causes a lot of frustration. So I think one area in there is how you could frame and work with developed countries based on their international climate finance commitments to reallocate some of those towards these premiums that support efforts that relate to AA, rather than waiting and for when there's a after a disaster actually happens. So that's the understanding at the moment from the Pacific Island countries is usually on DRF, the obligation falls on the countries themselves to meet those premiums because of affordability issues. Sometimes they approach development partners to subsidize the premium payments for them on their behalf. And I think some of these things also present the key question. You have social development priorities and whether to pack some funding for something that might or might not happen in a particular year, or to spend it on immediate priorities such as health, education. And these are key critical issues that governments in the region also grapple with on a daily basis. Just quickly on the private sector issue, at the moment, we also have some initiatives that some countries are taking. For instance, in Tuvalu, they now have what they call a survival fund that helps communities to respond to both climate change and disaster risk impacts. In Palau, they have a departure tax, and for non-Palauans, when they depart, they have to pay a $50 departure tax, and that's put into a trust fund that supports with responses to disasters. And in Fiji, recently they've had an initiative known as ICAL, which is Environment Climate Action Levy. At the moment, they are just working on their DRF strategy, and I hope that would be tied into that mechanism that they've developed in Fiji. So there are opportunities, but still long way to go.
Yeah, maybe I can just add, yes, I think the humanitarian and the development partners are definitely coming together more often. And somehow with that also the funding that comes for either climate change or climate change adaptation and humanitarian response. For example, yes, I think Green Climate Fund projects, right, include longer term programming, but then also elements that go into the anticipatory action or that enable an anticipatory action and response. I think, yes, we definitely see that happening.
Yeah, thank you very much for the presentation. I think I found them very inspiring. My question is for Raymond. Before the anticipatory action becomes like a new buzzword in the Muslim communities, I think the best anticipatory action is DRR. So I found that the anticipatory action is kind of, I can see the merit of it. I can see the objective and the beauty of it. But I can see how language and logic suffers from it. Because probably early warning and early response could be better. I think IFRC has been using viewers as a kind of framework for a very long time. But when anticipatory action becomes like a new discourse, it could be falling into corrupt minded of the governments, because you can sleep forever and then waiting for the next, you wait for 2-3 weeks before disaster happen and do something. What do you think about that? The ethical dilemma of this terminology. I found like your presentation is beautiful. I mean, we expect that to work more, and I think, but ethically speaking, there is a ethical problem in the language. That's probably. I just wanted to hear your response to that. Thank you.
Could I just jump in here before, so I just wanted to jump in because I completely understand you. I was, when anticipatory action first entered into the, it was such a new thing for me, and I had no idea how to differentiate. I was like, that's disaster risk reduction. And then I think because of working with Raymond and Zingg and Tonga, right? So we have cyclone season. Every cyclone season, you know, it's the 1st of December, we do exactly the same thing. We kind of like trim the trees, clear the gutters, sweep the backyard. These are just things we do. We don't know whether a cyclone's coming, but we do it all the time, just automatically. You know, we drain the water tank, all of that kind of stuff, because we're preparing for rain, like storms, etc. And I could never figure out where anticipatory action, like how was that not anticipatory action, until Raymond kind of said, you need a forecast, you know, like, and he's right, because for me, those are the actions we take all the time. But as soon as we say there's a you know, there's a hurricane, we've got 2 days, the actions we take are different. We are tying down the roof, we are boarding up the windows, we're, you know, buying food, we're lifting secure things off from the ground. And that's just for that particular window. It's kind of like the actions that you do once you get a warning that something is imminent, that it's coming, and the actions you take are different from those. You're right, because if you had been doing all of these preparedness stuff, that definitely helps your anticipatory action, rather than if you hadn't been doing it, then you've got to do everything now in this space of time. I'm not the expert, so now I'm just going to stop and hand over to the expert to answer your question.
No, perfect. I think that's a perfect example. Yes, thank you. Yeah, no, I mean, just to add to that, right? Yes, of course, early warning and action, forecast-based financing, it basically all means the same. It's the same, and anticipatory action falls under the DRR umbrella. It is part of the DRR component, right? I think the one aspect I would say is early warning on action works but there's not much financing tied to it. You have a lot of early warning and then not much of action. And then the financing comes and then you do the action when it's actually not relevant anymore. And that's somehow the advantage of AA, because you need to have that plan, because once you have a plan, you know there is funding and the funding comes from specific sources. But that is definitely one element. The other thing is anticipation it's basically a band-aid, right? There's nothing more to it. We don't want to replace anything. It's just one element within a lot of tools that you can do. You still need to do response all the time and all the preparedness and DRR work, right? Ideally, we would plant mangroves and trees, things that really help, but we can't do that if we want to call it anticipatory action, right? But that's still something that we should do. It just takes a lot longer, and financing is different. Yes, of course, there is a bit of danger since it's a buzzword and everything wants to be anticipatory action. I was in a session that said earthquakes are anticipatory action, and by no definition are earthquakes fit into AA, but they want to make it because it's a buzzword. And it's just that there is that danger, yes, that people then also misunderstand or label it wrongly, I guess. Yeah, thanks.
Great. Do we have any further? Oh, yes, Marlon.
Thank you. I would like to address my question to Raymond. Okay. I heard you talking about AA as a hazard specific. That's why there's a 101 more or less in Southeast Asia or in those region. And now there's an ongoing efforts to promote multi-hazard early warning system. How would you relate this to, I mean, which direction are we heading? Would you propose AA, or is a multi-hazard early warning system an option?
Yes, beautiful. Multi-hazard, yes. We all want to do multi-hazard. We're very bad at it, though. Also because of the early warning system that is not yet there in place, right? But once we have the early warning systems for all of that in place, we can also take actions. Ideally, we would have like a protocol with lots of hazards, right? So it's a multi-hazard protocol. That would be beautiful. But yeah, we're just not there by a long mile. But yes.
Great. Are there any final questions? Okay.
Hi, I'll ask one from here. My name is Carolyn Hawkquist. I'm a lecturer here at UC. I've been involved some with anticipatory action for flash flooding, which I also agree is one of those very difficult categories. And I guess I wanted to ask you what you saw or from the group of your experiences, some of like the key decisions or important decisions and how they were informed. I'll just briefly say for flash flooding, some of the most difficult things for us was the modeling side of what sort of localized data you needed to actually have the right valley identified for the flash flooding. It's very locally specific. And then also like setting the triggers of like when the appropriate trigger is and how much time you need to actually do that action. So I'll just say that from the flash flooding side, but I'm really curious for different hazards that you've been involved with for anticipatory actions, what sort of those key decisions are in the process.
So key decisions for?
Key decisions like for setting what that looks like. So for example, I've seen it from like the finance side, sometimes for insurance, where it's like, okay, if 40% of the country is flooded or something like that, right? Versus like for anticipatory action, like what are some of your main decisions around what's triggering?
Okay, yeah. So yeah, that's a good question. I mean, the trigger, which is somehow the heart of the protocol, actually goes back to the financing, to the funds or to the donor, because we can't trigger for every annual flooding, right? So there are conditions or how we can use the funds for IFRC, for the DREF. It needs to be above average impact. So once we have above average impact, we need to understand, well, what is the average impact And then we would need to have a forecast that also tells us, this is actually average impact. So we can't say, it's gonna flood 1 meter. The floodwater is 1 meter. We need to understand how much damage does this much floodwater do here and over there and in an urban area, in a rural area. And it is just very difficult and it takes a lot of time, but it also takes a lot of resources. So I think that is one point, right? To define the trigger level that matches the donor requirements, at least that we have. Yeah, but then you could also go the other way and say, well, actually, we just want to help people that are affected, and we are going to lower the requirements from the trigger side and make it more general. But then there are lots of challenges with that as well, because then you will suddenly have a much broader defined geographic area where you could go, and then the decision goes more into, okay, we know it's going to flood there, and then, but how do we narrow down? Whereas with the other side, you would have an impact-based forecast, and it tells you exactly that's where the highest impact is, and that's where we're going to go. So that's definitely the trigger side there is difficult. The actions, I think, are also, so which actions can we take? Somehow people prefer cash, but also I'm also wondering, well, what about early warning messaging? It can just be the messaging. That could be enough for flash floods, right? Maybe that's at the moment, that's what we can do. I think somehow looking at very simple, straightforward actions could be also good.
Great. Thank you so much. So I want to thank Professor Amita, Exsley, Raymond. Thank you so much for your presentations, and thank you also to everyone for your great participation.